Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Shell. This was as well. Shell, a very good afternoon to you as well. And market surely good afternoon coming in on that front as well. 19,800, it's what it's managing to hold, and a good recovery that we've seen there as well, right?
Absolutely. Not just a good afternoon, a very good afternoon coming in for the markets, Vinny. As you can see it on your screen, 19,800 is surpassed for the benchmark indices. That's your Nifty today. Stellar set of recovery coming in, just like the way you mentioned, given the fact that we actually started the day on a very negative footing. From there on, we've actually recovered in the from the day's lowest point, holding on to good gains. Nifty Bank also is moving in tandem, but yes, it's a tad bit of underperformance coming in when you compare it to the benchmark indices. Take a look at what the broader markets are doing, and they're shining pretty bright in trade because you have the broader markets at record high levels. You have a small cap index that is outperforming the benchmark indices once again. Talking about the list of gainers and the losers, actually, if you look at the advanced decline ratio for now, actually, it has shifted a bit in the favor. It is still in the favor of the gainers, but you've seen the losers also increase quite a bit. So yes, it's not like one-sided move coming in for the gainers. The advanced decline ratio now is pretty much neck to neck coming in at this point in time. Talking about the list of gainers then, TCS is the top gainer at this point in time. 3% uptick coming in for TCS, Tech Mahindra, Infosys, HCL Tech. All of them are the top 4 gainers on the Nifty at this point in time. So suffice to say that the Nifty IT index is among the top sectoral gainers, while on the flip side you have Power Grid, Coal India, Axis Bank as well as Tata Consumer among the ones that are losing in trade today. Talking about the sectoral indices and what's the picture there, apart from metal index, rest all the sectoral indices are in the positive territory, with IT index trading higher by about 2.6%, Vinny.
Okay, surely keeping an eye out on the markets, and IT is holding on to strong gains there. But on that note, let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. And on the technicals today, we have Kunal Bothra joining in with us, while from the research team, we have Lisa as well as Ankita joining in with us. A very good afternoon to all of y'all as well. And I'm going to be starting with the first stock that's in focus, and this is Star Health. This is actually on the back of a meet that they had with the Nuvama, and certain key highlights that have come in where the company is saying that there has been an average price hike of around 20% across the industries. And for Star, the portfolio there, we could expect maybe a hike of around 10 to 12% coming in terms of the price hikes coming in there as well. They expect loss ratios to come off as the year progresses. Now, this is mainly furthermore, given that the impact of the price hike is yet something that is expected to play out as well. Now, they expect loss ratio to come in this ratio because of the price hikes. Further, the loss ratios were high due to the dengue as well as other seasonal reasons as well. And now, early trends are indicating that the new hospital admissions are reducing, and if the composite license becomes a reality, then it may target the term life as well as ULIP business. But as of now, they have no plans on that front as well, and no plans to enter even a property or a motor segment as well. So on the back of this, we're keeping an eye out on Star Health. Very subdued in trade. It saw a bit of a spike up early morning, but now given up all those gains, trading with cuts of 0.5%.
All right, moving on then, Kunal, let's talk about Ipca Labs. How is this one looking on the charts to you? No doubt the pharma sector as a whole, everyone's liking, but Ipca Labs, do you think stands out now?
It stands out, and it could be now termed as a breakout stock, because the stock over the last 1 or 2 weeks was showing signs of a consolidation. 1,050 approximately was the high end of the range for Ipca Labs. The stock was trading into this 20-point, 30-point band for the last 1 week. But then, of course, in the last 3-4 months, we've seen the stock making a pattern of higher highs and higher lows. So there was a pause in between previous week for the stock price as compared to the fierce uptrend the stock has shown in the last 3 months or 6 months as such. So I believe that this is a clear sign of a breakout for Ipca Labs. The stock breaking past about 1,050, which I believe could now act as a strong pivot support over the near term for the stock price. I'm expecting that Ipca Labs could probably head towards levels of 1120 to 1150 for the very near term.
All right, moving on then, let's talk about PCBL, that is known as Philip Carbon Black. That's what it was known as earlier. Now it's known as PCBL. That particular counter actually hit a record high level in today's trading session. If you look at the reason why it has hit a record high level is because You have JM Financial that has initiated coverage on that particular counter. They've initiated the coverage on PCBL with a buy rating and a 12-month target price of around 290 rupees per share. If you look at the target price, it actually represented as much as 35.6% upside to the stock's last closing price. What JM Financial is saying that PCBL will benefit from demand for lithium-ion batteries, as carbon black demand is likely to more than quadruple by the calendar year 2030. They're also saying the company's core earnings is likely to grow 14% CAGR over FY 23-26. The PAT is expected to rise at 12% CAGR over FY 23-26 is what JM Financial is noting. What they're also saying is that PCBL is well placed to export to North America and Europe, and also has price advantage over China carbon black makers. And on back of that, positive note coming in from JM Financial, initiating a buy coverage, a sharp rise in the target price. PCBL is buzzing in trade, hits a record high level today.
That is PCBL for you all. Let's move on and talk about Tata Steel on the charts then. Kunal, what is the indication that you're picking up now for Tata Steel? Last 1 month has been quite subdued when you look at it in terms of a performance. Now what is the expectation?
So metal stocks, according to me, I think are making a good comeback. The Nifty Metal Index today has surpassed the 50-day moving average. And the reason for picking up Tata Steel is because today on an intraday basis, the stock has managed to surpass above the 50 DMA. Now this in the context of the last 1 or 2 weeks back, when the stock was on the verge of breaking below the 200-day moving average. So it's a strong turn of events for a stock like Tata Steel. Now the previous high, I think the month of September, the stock had made a high of 135 and the low towards the 200 DMA was 115 mark, which means almost a 15 to 20% correction has been completed for Tata Steel. And typically we've seen that whenever a stock complete a retracement as well as a corrective phase, and once they start to move back above the 50-day moving averages, these stocks, they come closer to breaking their previous highs. So extremely bullish on Tata Steel, expecting the stock to hit levels of 135 plus over the very near term.
Alright, so that's the view coming in on Tata Steel. Lisa, KNR Construction, that particular counter is in focus on back of the news flow.
Yes, on the back of its numbers actually, but the number came during market hours yesterday, but the con call that happened post market hours, so that's what I want to highlight. So they delivered a good set of numbers, and in the con call the management highlighted that the order book that looks quite promising, the pipeline is quite strong, it stands at around 45,000 crore, and they also anticipate winning projects in the range of 200 to 300, 2,000 to 3,000 crore in FY24. And in terms of diversification also, KNR is looking to bid in other states as well, and also looking at metro rail projects as well. So on the back of this, the brokerages also have maintained a buy on the stock. They have, talking about Axis Securities, they have maintained a buy rating on the stock at a target price of around 305 per share, as well as Motilal Oswal also have reiterated their buy rating on the stock, and they have revised the target price to 320. So we can see the surge in price today. It's up around 7% flashing on the screen, and it also touched a high of 284, just a bit shy of its 52-week high of around 291 per share. So that's on KNR Constructions, buzzing on the back of strong outlook.
Okay, let's move on and talk about Infosys then, Kunal. And this one surely at 1,447, an attractive time to enter Infosys now?
Well, yeah, it looks like, because when at a point when many of these larger cap IT names were struggling, the mid cap IT stocks managed to outperform. But now I think is a case where many of these large cap IT names are also looking as an attractive risk reward bet. So today, as well as I think yesterday, if I'm not wrong, stocks like Infosys and TCS, they've managed to surpass their 1 week or 1.5 odd week swing highs for themselves. They are also coming closer to their respective or individual 50-day moving averages in terms of a breakout. Now this could be potentially a very strong indication that the negativity or the pessimism for the Nifty IT index could also be behind us. And these stocks are significantly above their September 2022 lows, specifically Infosys and TCS. And I believe that the minor pause or a corrective wave which was going on into the large cap IT stocks in the last 2-3 months, I think could now be termed as significantly behind. So I would probably expect many of these large cap IT names, including the likes of TCS and Infosys, to give returns somewhere in the range of 5% to 10% in a matter of the next 1 to 2 weeks.
All right, so that's the take coming on Infosys. But Ankita, let's talk about VST Tillers and why is it in news today?
Well, yes, this farm equipment manufacturer has been soaring in trade today. It is up almost 7% in trade. Now, this is on the back of new launches. They have unveiled 3 new tractors, including the indigenously developed electric tractor at the Agritechnica 2023 in Hanover, Germany. Now, remember, the company had also introduced 6 tractor models under Series 9 as the most advanced compact range in the month of August this year. And this has been a year for new launches for the company. And as of now, they've unveiled 3 new tractors. And on the back of that, the particular stock is soaring in trade, up 7.3% right now.
Right, absolutely. Keeping an eye out on that. Let's move on and talk about Hero MotoCorp. This one is in focus today. And why is that so? Because obviously we have the numbers that have come in from festive sales that have crossed 1.4 million units in just the 32-day period as well. So on the back of this, we're keeping an eye out on Hero MotoCorp today. These numbers look very strong. Look at the up move that we've seen in the stock price as well. Because of that, a sharp up move that has come in the stock price post this announcement came in as well. So yes, overall the numbers for the festive period, 1.4 million units. Robust customer demand was seen in the rural markets. Very positive sentiment in the key urban centers as well. That drove overall the retail sales to record levels. And post festive season, the channel inventory that has also come down to its lowest levels in more than 3 years as well. So good numbers coming in for this festive period. That's the highlight coming in from Hero Moto, and that's what is keeping the stock abuzz as well.
All right, so Hero Moto is buzzing on the fact that it had spectacular sale during the 32-day period, the festive period. But Kunal, do you think that the festive period for Hero Moto will continue beyond the move that is already made?
I think it seems like the festive mood has just begun for the stock because typically we've seen the auto stocks in the last 600 or 700 point of the market rally from 18,800 to 19,600 approximately, being an underperforming sector. Now specifically the likes of Hero MotoCorp, etc., they were going through a bit of a drag for themselves. But today's move is a very strong indication that many of these larger cap auto names, both from the two-wheelers as well as from the four-wheeler side, these stocks are on the verge of making a breakout. Now for Hero MotoCorp, this 30 to 40, 50 level on the spot basis could be a very strong indication of a bullish pennant formation kind of a breakout for the stock price. And if you look at the sum total of the pattern, then it's almost like a 600 to 700 point pattern for Hero MotoCorp, which means what we are potentially looking out for is not just a minor rally of a few percentage points for the stock price, but something which could potentially change the texture of the stock over the very near term. I'm expecting the stock to head towards even levels of 3,600 to 3,800, which could potentially be a fresh multi-month high for Hero MotoCorp over the next maybe a couple of weeks.
Okay, let's move on and now talk about Kalyan Jewellers. Lisa, this one is a bit subdued on trade in the last couple of trading sessions. What is the reason for today's Kalyan Jewellers fall?
Yes, so the reason is that ICICI Securities, they have come out with a report on Kalyan Jewellers, and they have downgraded its rating to add and also revised its target price from earlier 300 to 360. So in a way they have hiked the target price, but they have downgraded its rating. They have largely maintained the revenue and EBITDA estimates for FY24 as well as 25, and they have modeled the revenue CAGR of around 25% for the next 3 years. And at this target price, the company, as per ICICI Securities, is now trading at a multiple of 47 times on FY25 PE. Now, they say that the key risk that ICICI Securities has flagged off is that the expansion that they are looking for, that may see some delay, the showroom expansion, as well as high competitive intensity in the South Indian market. So these are the key risks for Kalyan Jewellers. So that is the reason we can see Kalyan Jewellers, it's down about in trade today.
All right, next up, let's talk about the IPO that is all set to be launched, and that is going to be from the Tata Group stable. It will be the first IPO in almost 2 decades, and because of that, you have Tata Motors as in focus. So you have Tata Technologies, which is a subsidiary or which is the engineering unit of Tata Motors. The IPO will be opening for subscription on November 22nd and will close on November 24th. And the IPO price band is set at around 475 to 500 rupees per share. So that is the details coming in for Tata Tech IPO. Remember that we've been waiting for this Tata Group company to go public. And remember that this is the first Tata Group company to go public in nearly 2 decades. And that is Tata Tech IPO, which is a wholly owned subsidiary of Tata Motors. Remember that the IPO will be opening on November 22nd. And the price band that is set for this IPO is 475 to 500 rupees per share. So something that we all need to watch out for very closely, given the fact that this is going to be the first one coming in 20 years from Tata Group. But my colleague Ajay Sharma caught up with the management of Tata Technologies. Here are what they had to say.
I'm very much looking forward to the plans that we've got for the organisation. As you confirm, this is the first IPO of the Tata Group for the last 18, 19 years. And it is an OFS. But for us as an organisation, we're very much looking forward to the endorsement that it will provide. I think the scrutiny that the financial markets will apply to our organisation will certainly reinforce the trust between ourselves and our customers. And I think the profile that the listing will provide will also provide us with an opportunity to really position the company effectively to help us recruit the best and the brightest in this very exciting space that is the emerging engineering, research and development market here in India.
Great. Warren, I was also analyzing the valuations you're coming out with and offering the shares to the public. I would congratulate, and I'm not really surprised in the Tata Group to leave. It appears that the idea was to leave some value on the table. But maybe a comment on that, but also the multiples, or how is a company such as yours and auto tech company, if I may call it, how should it be analyzed? On what metrics is the right way to look at it?
Well, I think in terms of valuation, the discovery exercise and process that we've been through has been informed by the feedback that the banks have received from the investors. After the roadshow, a recommendation has been made to the board, and the board has adopted that position. In terms of the way in which we are measuring our company, I always position for our teams that there are 3 priorities that we've got, and that's growth, growth and growth. The market here in India continues to grow at a faster rate than the addressable market globally. And so we think that we are in a very exciting swim lane. We believe that the credentials that the company has established over more than 20 years, the customer base that we have, the capabilities that are truly differentiated, I think put us in a very favourable position. And we're excited about the space. We're also excited about the position that we, Tata Technologies, are in. So we are absolutely invested and committed to growing with the market and to fulfilling the potential that we believe that we have.
Mm-hmm. But Warren, I was just looking at the geographical breakup. About 30 to 40% of your revenues actually come from India, and the others are from rest of the world, and Europe. Pretty diversified, I would say, but still. How is the mix likely to pan out in the next 3 to 5 year kind of a period?
Yeah, a great question. In terms of Tata Technologies, one of the things that differentiates us is that although we're very proud of our position here in India, we're very much a global company. We're not an India out company, and so we practice a very balanced onshore offshore proposition, and we've got a very balanced set of revenues from different parts of the world. We are active in Europe, North America, and here in Asia. We manage our operations around 19 different delivery organizations. And what that allows us to do is build very strong and strategic relationships with our customers onshore. And that provides the interface and the leadership from which we deliver value from our offshore locations here in India and in Eastern Europe.
Warren, you spoke about how the idea is growth, growth and growth, and that's how you interact with your team as well. What kind of outperformance do you expect from the company going forward, or are you internally aiming for as well with your team versus the sector? Because sector itself is a high growth sector. Could it be mid-teens to higher teens? How are you looking at growth or measuring growth in the environment?
Well, we don't provide guidance as an organisation and as a group, but what I can tell you is that we are incredibly ambitious in terms of the value that we want to deliver to the customers that we work with. We're incredibly ambitious in terms of growing the breadth and depth of the capabilities that we represent. We truly believe that India will be the innovation and the engineering hub for the global manufacturing sector. We are, as confirmed by Zinnov, as the #1 automotive engineering service provider here in India, and we're going to work very, very hard to protect that position.
Right. Also talk to us about new growth levers which you have, which you can be pressing, and on the one hand, because of your expertise in engineering R&D, especially in automobile space, but also look at newer avenues beyond automobiles, maybe aviation. That's a high growth potential market here in India, or any other. Would that provide both better growth prospects and also higher margin profile going forward?
Well, that's a great question. If we look at automotive first and foremost, we're going through a once-in-a-generation transformation along the vectors of change as the industry pivots towards autonomous driving, connected services, the move from internal combustion engines to electrification or alternative propulsion systems, and the move to shared mobility. One of the things that distinguishes Tata Technologies is that we've been part of that journey almost since the outset. And one of the things that distinguishes our company is our ability to be able to take on the responsibility for the development of a full electric vehicle. So we are incredibly well positioned in the automotive space. We're also excited about what we're doing in aerospace and transport, construction and heavy machinery. If you look at aerospace, the aerospace industry has really bounced back in a very healthy way since the pandemic. Companies like Boeing and Airbus can't produce enough aircraft today to satisfy the demand. If you look at the industry projections, there are about 22,000 aircraft in productive use today. That is deemed to more than double in the next 20 years. That's going to drive significant demand for engineering services, and we believe that will provide tremendous tailwinds for organizations like Tata Technologies. As far as transport, construction and heavy machinery is concerned, that industry typically lags automotive by 3 to 4 years, and so we're seeing in the construction space and in the mining space and in the farming space, we're seeing the same type of disruption again as the industry pivots to cleaner emissions and smarter capabilities through the introduction of technology and software.
I'm also curious to know how the intention of the company is going forward. Transportation, of course, is your mainstay, 65% of revenues coming from there. But would it change going forward? Would you like to bring it down to 40 odd or any other kind of a number in mind, while other segments actually also grow meaningfully in the next coming years?
We certainly, as I referenced before, we certainly see significant demand in automotive and the associated mobility space, and we'll be focused upon making sure that we harvest the opportunity that represents. But we certainly see significant opportunity outside of that. Aerospace, I referenced before what's happening within the broader market, but also the investments that the group is making, the acquisition of Air India, the procurement that Air India has undertaken of 470 single aisle and wide body aircraft. That's affording the group a significant amount of influence globally, and those tailwinds we expect to be able to position effectively for Tata Technologies. So again, I'm not going to provide any guidance in terms of the balance between the different sectors that we support, but we see growth opportunities across the board, and we are absolutely focused upon exploiting that in the context of fulfilling the potential that we've worked hard inside of Tata Technologies to position for ourselves.
Last question then, we started a conversation on that note, that the company is not hitting the street for demand of funds actually. It is an OFS, right? It is more about making a statement and deriving confidence from the street and validation from the street as well, and even attracting scrutiny for all the right purposes, right? I want to ask you today, because this interaction is important. This is your first one right ahead. We will be having interactions often. The street will analyze numbers on a quarterly basis from here on. But anybody who is watching this chat and wants to take a 3 to 5 year and beyond kind of a view on the company to participate in the journey, what would your bigger message or vision be?
Well, I think as we look forward, if we look at the way in which the industry is evolving, if you look at the global addressable space for engineering service providers, it's about $100 billion. And that addressable space is growing faster than the overall engineering research and development market. But the contribution from India is growing at a faster rate than the addressable market. We are number one in automotive here in India. We are investing very heavily to improve our positioning in aerospace, transport, construction, and heavy machinery. And as I referenced before, I truly believe that India will be the innovation hub, the platform from which the majority of product development work will be driven in the future. We believe that we are in a fantastic position to be able to fulfill that potential for Tata Technologies, for the Tata Group, and to make a meaningful contribution to what will happen to the industry over here.